Last week, Biden put out a tweet bragging about how strong is the US stock market and how good indicative it is for the economic growth in the United States. Well, 3 days after we saw the CPI print came out, and that is slightly above the expected value, and the market tanked, literally tanked. So if you look at the market right now, the small caps dropped by 5%, which is worst since June 2020. S&P dropped by 2%, which is worst since December 2020. So the market was crashing hard because the CPI came out slightly above the expectation, and the reason is because the Wall Street need cheap money. The Wall Street need cheap money to pump this market. Okay, so because the CPI came stronger, there is a much higher probability that the Federal Reserve may not start cutting rates in March. It may be delayed until June or July. And last month, the market was pricing in 6 rate cuts, right? Remember that? Now it is pricing only 3 rate cuts, and it may not start as late as June this year. So things are changing, guys. I talked about in my yesterday's video, things are changing as we are seeing more indicators coming out, more data is coming out. That doesn't really show us any strength in the economy, okay? So the stock market is not really the good indicator of a stronger economy. Bull run for the last 2 months only happened because we saw the loose financial conditions being presented by Federal Reserve in December, and since then the market took off, right? And this is all, rallying based upon the potential rate cuts coming in as early as March in 2024, and now things are not looking like that, so the market is tanking, right? Bond yield spiked, big time. We saw a 10-year treasury yield in the US, shoot off from 4.1 to 4.3%, 20 bips in a day, right? That's a huge move in a bond market. If you look at the other treasuries, they also follow the same route, and the yield curve inversion got even worse. And right after that, we also saw the US dollar spiked up on the DXY, which means more difficulties, more pain in the global economy, because when the US dollar gets expensive, everybody else struggle in the global economy. And when the US dollar gets expensive, gold also tanks as well most of the time. And we saw the gold prices came down as well, down to 2,000. Surprisingly, the oil prices shoot up. I mean, it was continue going up, but after this CPI print and the dollar gets expensive, the oil prices also moved up higher. And if you look at the CPI data, if you drill down the individual items in the CPI bucket, not a single item in that bucket is telling us that the inflation is 3.1%. Everything else is above 3, 4%, 5%, 6%, 10%, right? And I don't know how the BLS is kind of calculating that inflation is still 3.1% year over year. Not a single item on this chart is 3.1% or less. Everything is above 3%. So you let me know how BLS is calculating it. It looks like financial shenanigan and financial engineering being done by BLS to kind of put the lipstick on the pig, make it look like Biden administration is winning this race against inflation and economic struggle. Well, the reality is they're not. The economy is still underwater. Like if you look at these inflation items in the CPI bucket, you know better than anybody else that how much money are you paying for this stuff: food, rent, shelter, right? Gas prices. You know how expensive things have been for you in the last 2 years, and you're still paying more money when you buy food at the checkout, when you pay for the fuel, when you pay for your child care, for your medical prescription. Everything is car insurance, everything is expensive. When BLS say the inflation is just 3.1%, that is not looking close, even close, right? So all of this financial shenanigan presented by BLS is nothing but fake numbers, guys, okay? And even then, that fake number is not being absorbed by the market. The market is tanking. They're realizing the inflation is nowhere near to be solved, and the Federal Reserve cannot afford to cut rates as early as we were predicting, right? I talked about in my previous video, things are not really looking good. And if the rate cuts happen, it's going to be because there is no other choice but to cut rates in order to survive. in the recessionary economy. Anyway, you let me know what you think about that. Put your comments down below. If you like this video, give me a thumbs up, subscribe, and I'll see you in my next video. Bye.